Brunello Rosa, founder of Brunello Rosa and Rubini Associates. Good morning, and thank you so much for joining us.
Good morning, and thank you for having me.
So, a lot of selling here in Europe, and not only the same story when it comes to US futures. What's driving the price action in your opinion? Do you think it has anything to do with inflationary pressures to the upside?
There's an element of that. I mean, let's not forget that equity valuations have reached new highs across the board, in particular in the US. So if phase of respite is kind of natural to happen, especially when growth is coming back and some inflation fears are coming online, and with it the rise in long-term interest rates. So valuations tend to be affected by that. But I wouldn't read too much in the inflation fears that I've seen developing in the markets. Yes, there are of course some bottlenecks, definitely, in the supply chains across the globe. There are shortages of some important components in the production cycle. We saw the semiconductors shortages affecting a number of industries, in particular in the most developed sectors, hence an impact on the tech sector that is dragging down general indices. But inflation is still driven by, first of all, the rebound in economic activity, which is normal, and with it in energy prices, which are a large component of it. There are still ongoing base effects, and there's of course the effect of the recalibration of the weights of the various inflation components, indices, having an impact as well. So yes, inflation is on its way up, but that's absolutely normal in these circumstances. The question is whether it's going to be transitory, it's going to be permanent, and how much investors will fear that this will be less transitory and more permanent than currently thought.
So if we take a look at the commodities, it's been incredible surge since the beginning of the year. What is the commodities new all-time record highs when it comes to prices is suggesting to us?
Well, again, commodity prices are the result of a comeback in economic activity. Let's not forget that between Q1 and Q2 2020, so exactly 1 year ago, there was a collapse in economic activity across the globe. And so the fact that there is a pickup this year means that, first of all, we see a number of year-on-year economic activity indices performing extremely well, and that commodity prices, which are an essential, with commodities being an essential components of the production cycle of many goods, coming back because economic activity is restarting. So we have seen oil prices at much higher level. Yes, it's true, when you see 64, 66 as recently, perhaps 70, it might be a bit scary, but we have been at 100 in the past. It's true, we've also been at 20, 25. But I would say this is a highly regulated market in terms of production, with OPEC Plus being the key determinant of how much oil comes online. And let's not forget there are ongoing negotiations on the US-Iran deal, and if Iranian oil return online, then that should have a dampening effect on oil prices going forward.
On the other hand, when it comes to inflation, certainly a huge role is there when it comes to the central banks. Central banks have a huge role when it comes to inflation as well, specifically the Fed. A few days ago, we've heard from Bank of Canada and also Bank of England, which are suggesting they will be slowing down with the QE, or the quantitative easing, in the upcoming quarters. Do you think the Fed and the ECB are going to follow suit, or it's too early?
It's way too early, and plus all central bank reflects is on circumstances. So Bank of Canada, yes, is a proper tapering of its purchases for government bonds, from 4 billion a week to 3 billion of Canadian dollars per week, without the extension in the maturity that we saw when the previous reduction from 5 to 4 was declared. So we can call it a proper tapering, but it's also true that they came just a couple of days after the government announced a huge fiscal stimulus package with more than 110 billions of Canadian dollars in investment. So it's just a recalibration, if you want, within the policy circles in Canada. In the case of the UK, the reduction in weekly and monthly purchases that we will see in coming months, perhaps it comes slightly sooner than expected, but it was still expected, because when the 150 billion pound increase in QE was deliberated in November, it was already clear that if they wanted to reach the target of those kind of purchases by the end of the year, at some point they will have to slow down. And so this is happening as it was supposed to happen, perhaps slightly sooner than expected, and to some extent the fact that we saw the first dissent coming in the MPC might have scared a bit investors. But again, this was highly expected. Then it would take some time for the BOE to invert its course of action. Plus, they still have to decide formally what they want to do in terms of the sequencing. If they want to tighten them balance sheet before increasing interest rates, for example, as they have indicated. The Fed has already said many times that temporary, non-permanent increases in inflation are not enough to prompt a tightening of its policy stance, and therefore we don't think the Fed will say anything about tapering before H2 this year, and will not start any form of tapering before 2022 at the earliest. And the ECB is even further behind in the cycle. Christine Lagarde said very clearly during the last press conference that the Eurozone is several quarters behind the US in the economic activity cycle,
right,
with the fiscal stimulus still needing to coming online with the Next Generation EU still need to be approved and implemented.
Right. So are you suggesting that the UK economy is doing better compared to the EU economy or the Eurozone economy together with the US economy, or not?
The UK economy is reopening faster than the Eurozone economy, thanks to the success of the vaccination campaign, and therefore the reopening of crucial economic activity, including hospitality, and more will happen next week. And therefore we could see some acceleration in economic activity in coming quarters, a bit faster than the Eurozone, which has suffered the second consecutive quarter of a decline in GDP. In fact, it's a short technical recession that has developed between Q4 and Q1. But overall, the UK still needs to be quite cautious, because we are seeing the effects of Brexit coming from the beginning of the year in a number of sectors, especially in terms of international trade, and also labor market statistics, with the shortages of labor becoming apparent as economic activities picking up. So, and that is reflected, for example, in the performance of the equity indices, with the FTSE 100 underperforming some of the American and European peers. So, on the one hand, the UK looks better, especially on the vaccination campaign and the reopening of the economy. On the other hand, there is still this whammy of Brexit that weighs on the prospect for the UK economy.
All right, thank you very much. Brunello Rosa, founder, Rosa & Rubini Associates, thank you for joining us, and have a great day ahead.
Thank you.